Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany, and together we bring you Morning Call Express. So our futures are pointing to a higher open this morning after stocks rallied to new highs yesterday following the Fed's announcement that they would, surprise, surprise, not in fact taper. But the interesting point here, Scott, is that there was actually some trends already in place, not only in our markets, but also around the world prior to the announcement.
We've been in a strong trend for a while now, and different countries have been taking turns stronger, weaker, but ultimately equity markets have been the place to be. Yesterday's surprise by the Fed by not tapering added a whole new dimension to it because it sped things up, which people might not have been prepared for. But if you overall look at the world markets, you look at just say Japan that started its rally early. Look at this trend here. This trend that started, last November, peaked here after a 50+% run. You remember that corrective activity here? We talked about potential buying opportunity. Then it's been consolidating, and here we go continuing. I would say at some point, 2014, this gets taken out. This has been in like a 2-decade type of channel. Then the weakness in the FXI has been there until, look at this, a double bottom. We talked about this double bottom many times here, in the morning call, and then a higher low, higher low, higher low. Here's when it broke the downtrend, gave you a move. We said let the 8-day catch up, and then boom. So now you're seeing better activity in China. You're seeing Europe at 5-year highs. You have Japan's continuing. So overall, the world markets have been getting better, and being an equity bull has made people money on a lot of different time frames.
Well, but in terms of our markets, you've talked about the road to 1700 in terms of the S&P for about 2 years now. So now that we've just powered through that, I would think at some point we've got to adjust that higher.
I think last time we touched 1700, I said we could probably see 1740 to 1760 at some point this year, just because everyone's like, oh, now that we've met your road to 1700, what now? And the reason why I put that out back in 2012 is I just saw so many fear mongers out there trying to get the actual retail investor out of the market, whether it was the European Union was going to implode, whether it was the debt ceiling, whether it was Iran, Syria. Ultimately, though, if you have a long-term plan, you can make money in the market. If you have a few different time frames, that's the way to navigate. And recently, if you take a quick look at the SPX, you will see that just this trend from the recent November has been very strong. It got tested right here after that outside day on May 22nd, held, then you had a rally, and then you remember this small corrective activity here with that head and shoulders top, came into the trend line and held. Okay, and if you look closer, there were adjustment points on the short-term intermediate basis. If you were thinking short, when we reclaimed the 50-day right here, that was your spot for adjustments. Then you had a gap up that digested. That should have given you clues not to roll up shorts, get some risk on. And then yesterday, what did we do? We powered through the last pivot. The last pivot was 1709, closed at 1725, and we're opening up today. Do you chase the market today? Probably not, since we're so extended. But overall, the trends have been strong, and hopefully you've been participating.
And of course, rate-sensitive assets performed best after the Fed's surprise announcement. We saw gold finish the day up 4.5%. Has your thoughts on gold changed?
Well, gold still is trapped in this downtrend. It's just a little unfortunate, probably for some, because a few days back, Goldman says it's going below 1,000. After it also already went from 1,400 to 1,300. So some people probably got caught there. You look at this trade, you want to see if there's commitment. Okay, we've been in this downtrend starting, if you take a look, all the way from almost 1.5 years ago. This is when we broke and broken. Now yesterday, I don't think it overall changes everything, but this is a really potent move. It filled the gap. I would say if gold or the GLDs could hang out in the top third of this and go sideways, there is a chance that it could break this long-standing downtrend. We had that micro move right here, which was very nice, and now this would be a more macro area. So it's on the list, and if things change, you got to change with it.
And we've talked a lot about the 2013 theme of going long the TBTs and short the TLTs in order to play rising rates. And yesterday we saw the TLTs rally, TBTs pull off. How does that play into the theme for this year?
Short term, it might be a little bit different, but longer term, I still think whether it's 6 months, 3 months, 9 months, rates should be rising. So if you look at what took place in the TBTs, you'll see that, it has been a really nice move, and entries and exits do matter. So with that being said, if you got involved in this area, you already had a nice move. And now if you look at this short-term pattern, yes, if, all of a sudden we pull in a little bit more, can it hit 72, 73 as far as the TBTs? Could, and I think this would be more of a buying opportunity than a selling opportunity. But first things first, it's got to get below this trend line and stay below it for more than a session or so.
And two sectors that came back strong yesterday, interest rate sensitive sectors, utilities, and the home builders.
Yes, and traders were like, okay, what happens if they don't do 10, 12 billion and they do less? What should go up? Gold should go up, treasuries should go up, interest rate sensitive spots, home builders been under pressure, they ignited, utilities ignited. You look real quickly here at the home builders, and overall they were definitely in a digestive type scenario, but never got below 28. Then it ignited above this 29, broke this little downtrend, and yesterday, was well on its way right near old highs. So, you have to keep rotating through these sectors. Some sectors, are in vogue for a quarter, then they switch around, and as traders, it's your job to find and follow the money.
Of course. All right, we'll be talking about all of this and more in the full morning call, so stay with us.